What's up, everybody? Hope everyone is well. Today I'm going to be covering my personal day trading strategy, what is included within the strategy slash what I look for when I am on the charts. I actually have done a video just like this almost about a year ago now, probably a little bit less. Things are pretty much the same, but I've made a few slight twists and changes that I want to go over and share with you guys because I do really think that this strategy, when it does play out and when you do spot it, works out beautifully, regardless of what kind of trader you are. Scalper, day trader, swing trader, this strategy will work regardless for you. So let's go ahead and hop right into it. Gonna make it very simple, very easy, because like I said, I have already posted a full in-depth video of, what the strategy actually is. But for this video, I'm just, like I said, gonna make it simple, gonna make it easy, go over the key things that I look for, the key things that I do, and let's get right into it. Awesome. So let's go ahead and hop right on the charts here. So boom. We are on TradingView. So for the people that don't know me or don't know how I trade based off of supply and demand. Supply and demand is the main concept that I use to trade within the markets, right? Obviously, just a simple, basic economic term, supply and demand, that you're probably familiar with, but supply and demand are one of the main fundamental drives behind all price movements. Like, regardless of if it's the stock market, forex market, crypto, whatever the case may be, supply and demand is what moves every single market. Very, very simple. Supply obviously just being an overload of sellers, or price just being too expensive, and vice versa for demand. If there's high demand, people are obviously going to be buying that up and prices are going to get higher. So you just apply that information over to stocks. But how exactly can we find supply and demand or trade with supply and demand? So the three key things that I do with my trading strategy, or that is included, is looking for my supply and demand zones, which is A. B is going to be reading price action within those supply and demand zones. So when price does reach those supply and demand zones, reading price action is going to be a very key thing. And then moving on to C, or the third thing is going to be reading order flow, or looking at Bookmap, simply just looking at orders that are coming in within that current moment when price is in those supply and demand zones, because that will simply just give you that further confirmation to see if those buyers are really starting to get in control and starting to place those buy orders and place them out in the market, right? So those are going to be the three key things. So I'm going to show you guys real quick what I do, the zones that I draw out, how I draw out my zones, where I put my take profit, stop loss. So let's get right into it. Okay, boom. So we're on the charts here. So when I'm drawing my zones out, it's actually going to be a little bit different than last time. I'm going to always be starting on the 5-minute when I'm drawing my zones out here. For a perfect example, I'm just going to use SPY. I have my, what's it called? I have my zones, or sorry, I have my charts naked, so I can show you guys, how I would draw my zones live and how I would do everything live. So anyways, so let's start with our supply zone. So when I'm drawing my supply zone, obviously I want to just look for the largest move that was presented to the downside. So in this case scenario, we can see a pretty large move that was then pushed to the downside. And what this means, since there was excessive selling pressure here, we obviously want to trade with that excessive selling pressure when price retraces back to that area. That's basically where supply was created. That's basically where areas of resistance are created. So those are the areas that we want to target. So what I'm going to do when drawing my supply zone is either the candle previous to the large move down or the candle that started the large move down, I'm going to mark out only the wick. So in this case scenario, you can see there really isn't a wick on this large candle going down. But like I said, the candle previous to that, you want to chart that one out as well, right? So we can see the candle previous. We're going to want to chart out only the wick, like I said, and then extend it out. And then you can obviously see as we already extended out, you can see we're already starting to get some reversals. So now that we have our supply zone, let's create our demand zone, right? Now, just like how we did for our supply zone, we want to spot an area that presents a large move to the upside or a sudden reversal to the upside. Because what that means is now that excessive buying pressure is being placed within the market or demand is being created within the market. So we want to trace or track that area where the buying pressure, excessive buying pressure, was then presented. So in this case scenario, you can see we had a pretty large move up. I'm going to just extend it out even more on the 5 minute right here. You can see we had a sudden reversal. So like I showed you guys, what I'm either going to do is I'm either going to chart the wick of the candle that started the move or the wick of the candle previous to the move. Honestly, typically I do the candle previous to the move. But they always work, and I'll show you what I mean by how they both work. So in this case scenario, if we were to only draw the wick of the candle that started the move when drawing demand, you can see it already worked out well. Obviously, we didn't get any full invalidations. We got a sweep of the zones while still holding inside, which obviously shows us that that level was still being respected. But this is why most of the time I will draw out the candle previous, because you can see here, now we have a little bit more room to trade with in terms of our demand. So like I said, you can kind of choose from the both. Honestly, I would realistically recommend drawing out the wick that's larger. Keep in mind, you're going to be on a 5 minute time frame. You want to draw out the wick that's larger. Because like I just showed you, this wick is, if we were to only draw off that wick, the zone would start at 516 and then end at 516.95. Or sorry, 515.95. So it would be a 5 cent zone. So that would be pretty difficult to trade with, pretty difficult to read price action within that zone, and also pretty bad for our risk, because obviously the risk is very tight, but sometimes we want to give our stop loss a little bit more room to breathe. You know what I mean? So that's why it is it is ideal to draw out the wick that is largest, whether that be the candle previous to the move or the candle that's starting the move. I hope that makes sense. So, boom. Now we have our supply zone and now we have our demand zone. I'm going to change the demand to green. Now, keep in mind, I've been on the 5 minute this whole time, right? We've been on the 5 minute drawing the zones this whole time. And the way I've been drawing the zones is I've only been using the wicks of the candles. So if it's a supply zone, I'm using the top of the wick. And then if it's a demand zone, I'm using the bottom of the wick, right? Now, after we draw the zones out on the 5 minute, we then want to switch to the 1 minute. Okay? Now the 1 minute is where we're going to be doing a lot of the reading price action, a lot of really deciding where to get the best entry possible. Where did those zones go? I believe it was over here. Okay, it should be right here. So now that we have our supply and demand zone set up, you can see that these levels of demand or levels of supply are working out very well on the charts, right? They're being heavily respected. You can see each time price comes into our demand zones, you can see we're having sudden moves inside our demand zones. Reason for that is this is the area, or this is the price range that buyers are interested in buying up most. These are basically the discounted areas, right? So market makers, institutions are going to look to get in at the lowest points possible, the discounted areas, aka demand, right? And demand is simply just those price ranges that present excessive buying pressure on the charts. Vice versa for supply. Okay, now that we're on the 1 minute, keep in mind these are our 5-minute zones. Okay, so I'm going to use this demand as example. So now that we're on the 5-minute, we want to draw and look for zones inside of our 5-minute zones. We want to look for 1-minute zones inside of our 5-minute zones. Because what these 1-minute zones are going to do, if we find them, is either going to give us A, extra confirmation for the trade, and B, going to give us more of that accurate, refined entry so we can really catch the best trade possible and not miss the move while also having a respectable amount of risk on that trade. So what I'm going to do here, like I just said, is I'm going to look for a 1-minute demand zone inside of our 5-minute demand zone. Now, when I draw my 1-minute demand zones, it's different than how I drew my 5 minutes, because on the 5-minute, I showed you I was just drawing them with the wick. But on the 1 minute, we're going to be using the whole candle, okay? We're going to be using the whole candle. So what I do, obviously, kind of same idea, is I really just look for a large move that's presented or a sudden reversal within the market. Because obviously that just means that's excessive buying pressure, selling pressure being presented. So we can see here we have a sudden reversal, a strong low being created, and a strong move that was pushed up, right? So what I'm going to do is I'm going to chart out the candle previous to that large move, and we're going to chart out the whole candle like I said. It's going to be a little different on the 1 minute. Now, I'm going to make my demand zone on the 1 minute a different color. Let's make it blue, so we really have an idea of what the zones are. Now I'm going to extend the 1 minute zone out, right? I'm going to extend it out all the way. Now we can see we had multiple reversals. Keep in mind, you realistically only want to use a supply zone 1 to 3 times. If there's already been like 3 reversals, if there's already been 2 to 3 retracements within that supply or demand zone, that zone is likely to get breached soon, right? The more fresh the zones are, the more unfilled orders, aka the more buying pressure or selling pressure is going to be presented, which then causes a larger move, aka more profits for us. So now that I drew out the 1 minute inside the 5 minute zone, like I said, the 1 minute zones are going to be our zones for entries, our zones to really get the best accurate point possible. Now you can already see bounce into the 5 minute, bounce into the 1 minute, boom, perfect, right? Same thing, another retracement, bounce into the 1 minute, bounce into the 5 minute, bounce into the 1 minute, boom, absolute explosion, right? Absolute explosion. Keep in mind, this is SPY, like I said earlier. So, and then for our take profits, what I always do is, like I said, or for the people that know me or don't, I'm a day trader, right? Most of the time, I'm looking to really just catch the initial move, take my profits, and go. You know, I really don't want to hold a trade for hours. If I have to, sometimes I will. But most of the time, I'm just looking to catch a regular size move, right? Just looking to catch a regular size move. So something like this or something like this, you know, a nice move to the upside is perfect for me. Sometimes something even smaller is fine. But where I'm trying to get with this, for my take profits, I'm always using high potential reversal areas. So what that means is, since we're trading off a demand zone and since we're trading with buying pressure, we want to look at areas on the charts that are likely to present strong selling pressure, right? Because that's likely to either cause a reversal, cause consolidation, etc. So as we're trading with the buying pressure, we want to look for the nearest highest potential reversal area, which obviously is going to be a selling area. So let's say that we enter right here, where what I would do is I would put my targets. I would look for high potential reversal areas. I can see we have a slight fair value gap on the 1 minute here. So at this fair value gap right here, I'll make it yellow. So that yellow fair value gap would be one of my first or one of my main targets to at least obviously trim, obviously take my profits. And then after that, if price continues to break above and continue up higher, then I will hold my runners and then I will continue to manage my position as price continues to move. And then obviously I'll also manage my risk if price does move towards the opposite side of where I'm trading. And then you can also see we have a pretty strong resistance area like right here. Yeah, you can see we have pretty strong resistance. You can see we had a bunch of selling pressure, a bunch of rejections right at this resistance here. So I would also basically just use either this resistance or this fair value gap as one of my take profits, right? Because like I said, I'm not looking to really catch anything too crazy, but a regular size move like this is a beautiful trade to me, you know? This is the types of trades that I'm looking for. And if these are the types of trades that you want to trade as well, this setup is going to be absolutely perfect for you, right? Now, let's say that you wanted to hold this trade a little bit longer, right? Let's say that you maybe you were a swing trader. Maybe you're just someone who likes to catch larger moves. What I would do is I would take my entry in demand, and realistically, I'd have my take profit all the way up here in supply, right? Due to the fact that that supply area, the nearest supply area, is most likely where we're going to have the largest reversal. So we want to make sure before we have the largest reversal, that's where we have our take profit area to secure the most profits possible, right? So let's say that we took our entry right here as well. And our stop loss, keep in mind, guys, my stop loss almost always is going to be a complete break below our 5-minute zone, right? A complete candle close below. I don't want to see, sometimes we'll get a slight wick below and then reverse right back up. Sometimes we'll get some BS. And you guys know exactly what I'm talking about. I want to see a full candle close outside of my zone for my stop loss. So let's say that I'm entering right here at 515.88. My stop loss would be below 515.68. So I'm only risking a little over 20 cents, right? Which is beautiful, which is perfect. And that's also the beautiful thing about trading with supply and demand, is that your stop loss is pretty much always in the same place, and your stop loss is always going to be a barrier level, right? Because price is always going to have trouble breaking through supply or breaking through demand, because that's where buyers or that's where sellers have to be strongest, right? So the demand areas and supply areas are basically barriers for us. That's why it's smartest to put our stop loss at those barriers, right? Because, price is likely to respect it. So that's where I almost always put my stop loss, keep in mind. And then as I was saying, you can do literally just target your supply, which would be all the way up here, and then have your stop loss, like I said, at a full close outside this demand. So you can even give it a little bit more room like this. Extend that baby out. And then let's see this trade. Let's say you entered at 8 a.m. and then it hit supply at 10 a.m. So only a 2-hour trade for a beautiful move to the upside. You can see, obviously, if you were to enter here, we had a beautiful, nice move to the upside, but it looks like I said, there was a large area of support, or large area of selling pressure right around here. And that's what ultimately caused this reversal, right? That's why you always want to look for the opposing side of pressure whenever you're in a trade. And like what that means is if you're trading with selling pressure, you always want to look for where the nearest buying pressure is to put your take profits, right? Because you always want to make sure to secure the highest points. Sorry, you always want to make sure to secure the highest profits possible. And then we had that reversal, and then you can see we literally bounced right back into our 5-minute demand zone, right back into the 1-minute demand zone as well, perfectly into the 1 minute, right? And then you can see we literally absolutely just exploded from there. So beautiful trade, beautiful move, and most importantly, beautiful zone, right? Obviously, I can't. Market is open right now, but it's about to close in about an hour. So I can't really show you guys live price action of how it would be inside the zone, but you guys have definitely seen my videos and my live trades. You've 100% seen me take setups like this and seen me take trades like this off of these zones. Okay. And then it would be the same exact thing for supply. I'm not going to make it too much of a big deal or too much of a big thing for supply because I just made a huge example for demand. It's literally going to be the same exact thing for supply, right? Your stop loss is going to be a complete close above supply. You take your entry within that supply zone. Obviously, when your confirmations are adding up, such as price action, order flow, etc., and then you have your take profits, obviously at the nearest opposing levels of pressure. So obviously we're trading with selling pressure here. So we want to look for the nearest levels of buying pressure, which in this case scenario would be this demand zone right here. You can see we had a strong move up right here, right? So this is where buying pressure, excessive buying pressure was created / demand was created. So I'm going to mark out this demand zone. So this demand zone / support right here would ideally be your main target, right? Ideally be your main take profit. If you're scalping, if you're day trading, due to the fact that this is the area that's likely to present us with a reversal, right? You can obviously see price went straight back into our supply zone. And then eventually we broke this demand zone because like I told you guys, after like 3 or 4 bounces into a supply or demand zone, it's eventually going to get broken. You can see it got broken through right here. And then at that supply zone, look at that dump. You can see how strong sellers initially stepped in. And then I never drew the 1 minute zone inside the 5 minute. So okay, so look, strong move to the downside right here. So we want to chart out the candle previous to the strong move. We're drawing out the 1 minute zone inside the 5 minute. Boom, let's extend that baby out. Now, the 1 minute zone, keep in mind, is going to be like technically a entry zone for us or more of a accurate reversal area. But it looks like, we had multiple reversals and then initially this was the strongest one. But let's say that you X that out and then you did something like this. We had a strong move right here, right? A strong move down, which obviously means excessive selling pressure was created. So we want to mark out that strong selling pressure inside the 5 minute, mark out the candle previous. And let's use this area, this zone, as our entry area, right? Well, let's get rid of that arrow. We want to use, so this is going to be our entry area where my yellow line is, right? And then obviously our stop loss is going to be pretty much a close above our supply. Or if there's another strong level above our supply, near our supply, we can do that. So you can see we have a strong level of support right here, aka pre-market highs. So if you wanted to risk a little bit more on this trade, you can have your stop loss above these pre-market highs rather than that supply, right? Because pre-market highs / support are also likely to present us with a reversal if we don't get that correct entry, right? And then you can obviously see we would take our entry here, have our stop loss a bit above here, and then we would either have our take profit in demand sorry, this is more of an order block. We would have our take profit in an order block, fair value gap. You could do that as well, or in the nearest strongest demand zone, which would be this demand that we were just previously using. I can extend that out, and then we can do that, and then initially use that strong demand zone as our final target. If you want to, hold the trade for a little bit longer, and then you can see trade works out perfectly. You can see we had a little bit of consolidation here. This was towards the end of the day, so that was, pretty much expected, because sometimes we'll have low volume towards those times, but then looks like power hour started. This is 12 o'clock, so an hour before market open, and then looks like volume really initially stepped up. This consolidation, honestly, I would really consider this also distribution. Really, if you guys haven't seen my video on distribution or accumulation, that's basically the process of what happens inside supply or demand. But just to quickly break it down, distribution is when the institutional traders, market movers, are offloading their positions, offloading their sell positions. Since they have such large orders, they can't just click one button and instantly exit, right? They have to gradually offload their orders, offload their positions in chunks. And once the large amounts of sellers completely offload their positions, that's what initially then leads us to this strong push to the downside. And then you can see shortly after, pretty much we, came right back up. But like I said, this was pretty much towards the end of the day, and I'm really not trading towards the end of the day unless I'm holding a trade. But I'm really just obviously doing this to show you guys an example of how exactly you can trade with these supply and demand zones. Another key thing before I wrap it up, if you cannot match the 1 minute inside the 5 minutes, yes, you can still trade those zones, but honestly, when you match the 1 minute with the 5 minutes, that's further confirmation. Like, that's stronger confirmation, and that should give you more confidence to take that trade, because when you do and when you can match the 1 minute inside the 5 minute, that initially shows you where the strongest buying pressure or selling pressure was, right? But what I'm saying is, if you cannot find that match, then realistically, I would have less confluence than I would have as if I could match the zones, if that makes sense. But wow, it's been a 30-minute video. I said this was going to be quick, but I guess not. But that is pretty much going to be it. I went over all of the key things that I really needed to do. Like I said, I have made a more in-depth video on my strategy, but this is really like an updated one, and this is really like the setup that really gives me the most confidence when it is presented to me. Obviously, I'm not only trading this setup. Yes, I will trade with other setups every once in a while, but this setup is what I have literally been perfecting, trading with, and have seen to be working for the past years, literally. So other than that, I hope you guys enjoyed the video. If you do have any questions, recommendations, whatever the case may be, go ahead and comment down below. I will leave my my previous strategy video, if you guys want to check that out, in the description. If you do want to have the chance to personally work with me and see exactly how I trade, go ahead and book a call with me down in the description as well. We're going to hop on a one-on-one call together and really just break things down and see if you're a good fit to work with me and to get you to the next level as a trader. But other than that, hope you guys enjoyed, and I will see you guys next time.